investors, tourists, and global markets react to interest rates drop in Canada. The Bank of Canada has just delivered its first interest rate cut since March 2025, a move that's sending ripple effects across the Canadian economy, global markets, and even international tourism. If you enjoyed this breakdown, don't forget to hit the like button and drop your comments, and don't forget to turn on the notification bell. The central bank lowered its key interest rate today, citing cooling inflation and slower than expected economic growth. For months, Canadians have struggled with high borrowing costs, from mortgages to credit cards, and this cut marks the first real relief in nearly half a year. Impact on Canadians. For Canadian households, the immediate impact is lower borrowing costs. Homeowners with variable rate mortgages and lines of credit will likely see smaller payments. Businesses struggling with loans may also find some breathing room. However, it's not all good news. Savers could see reduced returns on savings accounts and GICs, while the risk of higher housing demand could push real estate prices back up. Impact on foreigners and investors. Foreign investors are watching closely. Lower rates typically weaken the Canadian dollar, which may make Canadian exports more competitive, but may also reduce returns for international investors holding Canadian assets. Stock markets in Toronto have already shown positive movement, especially in real estate, banking, and consumer sectors. Impact on tourists. For travelers, this could be good news. A weaker Canadian dollar makes visiting Canada more affordable, potentially boosting tourism ahead of the holiday season. Tourists from U.S., Europe, and Asia may find their money going further, giving Canada a competitive edge as a travel destination. Global perspective. On the world stage, this move signals that Canada is among the first G7 nations to ease monetary policy in 2025. It could pressure other central banks, like the Federal Reserve and the European Central Bank, to consider similar actions if their inflation numbers also trend downward. Global investors now see Canada as a testing ground for what might come next in worldwide monetary policy shifts. The big question now: will this rate cut be the first of many, or just a one-time adjustment? For Canadians, foreigners, and investors alike, the ripple effects are just beginning to unfold. Stay tuned, because the world is watching Canada's next move. Don't forget to hit the like button, subscribe, and drop your comments. And don't forget to turn on the notification bell so you never miss our next upload.